Well, welcome everybody to risk chain or supply in the ASIC risk supplies. What? Risk to the ASIC supply chain. It's easier to just read it off the screen, isn't it? My name is Benjamin Gagnon. I'm the Chief Mining Officer at Bitfarms. We're a publicly traded Bitcoin mining company that's been around since 2017, traded on NASDAQ and the TSX. And tonight we've got a special panel here. I'm going to introduce people one by one. First we have Irene Gao, Sales Manager from Bitmain. All right. Yes. Then we have Seto. He's the CEO of Epic Blockchain. And finally, we have Andy Long, CEO of White Rock Management. All right. And I'm going to sit down so that I can join these guys and not be so awkward. All right. So introductions are out of the way. I think we can just get into the heart of the substance. It looks like all of you are quite eager to hear about risks of the ASIC supply chain. A lot has happened over the last 2.5 years with the ASIC supply chain geopolitically, right, with the China mining ban, the 301 duties in the United States. Maybe we can just start off with kind of what's going on now in terms of geopolitical trends, where the manufacturing is going to take place today, where it's moving towards in the future, and how the recent geopolitical actions have affected decisions from Bitmain and Epic and other people in terms of where they get their miners, where they're manufacturing them, and where they're getting their components.
So maybe I can start?
Yes.
Hi everyone, I'm Irene from Bitmen. Bitmen is the leading mining rigs manufacturer in the world, and we are attaining the world's largest market share. And that's a good question about the locations of the manufacturer. So since 2021, we actually have multiple manufacturers and very strong supply chain globally. We have manufacturers originally from in China, in mainland China, and as well as manufacturers in different countries outside of China, like Malaysia. Most of our customers, they are private companies or public mining companies. They need to have diversity of suppliers, and they also have, as North America become the largest mining place, and more and more hash rates moving from Asia to North America, specifically United States. So our customer here require the products produced overseas, specifically from Malaysia or Indonesia, and so our supply chain can help them and support them with to meet their demand there. So what I could see is that's really the realistic that what clients need to fulfill their demand.
And Jimmy, you have like a slightly different approach with North American manufacturing. Maybe you can get into why you're doing your stuff in North America.
Okay, sure. So good morning, everybody. At Epic, we actually looked at supply chain from a different lens. We split it out by the foundry and the relationships that you have, the system level integration, the relationships that you have, and where ultimately our customers are. For sure, China has historically been the place where you do manufacturing, but I think aside from the geopolitical issues, the economy in China is doing very well. It's actually starting to cost more to produce in China. So dovetailing with that is kind of the push, especially with some of the tax implications that are associated with manufacturing in China. There is a push to do more outside. Southeast Asia is definitely one of the spots that we have relationships with, as well as in Taiwan. From a semiconductor perspective, a lot of the material does come from Taiwan. Can you actually do the system integration in Taiwan and ship from there directly to the customer? And then with respect to what's happening in North America, as old as I might be, I see things that are repeating itself, which is a little bit regrettable, is the notion that semiconductors should be coming into North America again. You see this whole push to have foundries, fabs in North America. Regrettably, the reality was, I think in the 80s, fabs were very prevalent in North America. And there was a big push, I think, from, I'll call it narratives about it being a dirty industry, being it consuming a lot of power, polluting the water. And there's very much this not in my backyard kind of mindset. And frankly, a lot of the semiconductors moved outside of North America. And then you kind of fast forward to now, a lot of that is being pushed back into North America. And when I see the mining industry, where there is a lot of push to say, it's not a good industry, please, not in my backyard, I really worry that from a supply chain perspective, what we're seeing there now will happen in the mining industry. So for me, the notion of where your supply chain has to be a forward-looking approach, and that's kind of how we look at it. Our clients are telling us, you're in North America, that's great. You do your development there, that's great. You have a very flexible supply chain, that's great. Please go at it. So where we are right now, as small as we are, we see a lot of headwinds with a company like Epic that can go forward in this space.
Fantastic. And then Andy, from a customer's perspective, how does the countries of manufacture, does that come into your decision at all? Does that impact your operations, your financial costs, the quality of the machines that you're getting? Like, are you looking at those country decisions?
Yeah, so I mean, the country of manufacture is important, particularly when you think about deploying miners in the US, right? So taking miners from mainland China, you have to deal with Trump tax, with Trump tariffs, and that's not economic, so you need to make sure that supply is coming from regions that's not going to be impacted by. And then the big difference that we've seen in, I guess, the last 12 to 18 months is the market dynamics going from the raging bull of 2021, where customers are having to place orders 6 months, 12 months out, and into the frenzy that we saw in December of 21, January of 22, where people are announcing exahashes of orders at $110, $120 a terahash, to where we are now after the crushing bear of last year, difficulty rising, moving to much more of a shorter time between ordering and shipment. So that kind of difference of being able to anticipate what the market is going to be makes a big difference in terms of what you commit to buy and to when.
Yeah, the forward purchasing and the short-term purchasing is a huge part of this supply chain, especially from the, at least from my perspective, the customer, somebody who's buying machines, I want to be able to know and be able to plan for my operations 6, 12 months in advance, but I also don't want to take on the risk volatility of what the pricing is going to happen on over the next 6 to 12 months, right? So there's a conflict there, and we definitely have gone from a period where, for all of time, this industry is based on spot sales. Then the supply chain crunch in early 2021 pushed us into that forward sales model. Now we're back more to a spot sales model. Irene, where do you think this is going to end? Do you think we're going to go back to a forward sales model? Are we staying on spot sales? And, from a manufacturer's perspective, where would you rather be at? In which kind of model?
Actually, the model naturally coming out just because of the increasing of demand. As I think I've been in this industry for 7 years, and in every bull run, clients' demand is just increasing so fast, and we have to help clients to meet their plan. And this also pushed the client to make the plan like all the public company did, make a plan for next 2 quarters or next year to ensure they can get what they want at really, really economical price. Because that's the 2 things very important for them. They have to keep the company's hashing power increase steadily with a really, really good price. So how I see the spot order and the future orders, I think first of all it's based on the demand, and we have to plan in advance. And secondly, it's actually based on the economical of the miners, because our clients all agree that if you purchase future orders, the price is relatively lower than the spot orders because you may have better payment terms and most flexible contract comparing to sports order. As we would love to work with the clients who have long-term plan and have very steadily purchased that benefits both parties. The risk of the clients might vary about 3 things. I feel the things the most concern is, first of all, the product availability, which can help them. It's akin to their growth. And the second one would be the quality control, whether the product can be run in their mining farm steadily all the time. And the third one would be the delivery time. So as far as the manufacturer part can finalize these things and just eliminate all their concerns, and they feel more comfortable, and it'll be easy for them to make the decision for long-term or future orders. So in conclusion, I feel in different periods of the cycles, people may choose or they naturally choose, or they have to choose different strategies, and either one has their benefits and their side part.
Okay.
So I can add some color to that. First of all, I agree with Irene wholeheartedly that planning is so important in the whole supply chain process. But what we see as the new player coming into the market is the best practices in other industries are now actually being applied into this space, which we think is great. Kind of at a high level order, there's a buyer, there's a procurement manager, and then there's a sourcing strategist. In a very transactional relationship, sometimes people think all 3 are the same, but the reality is they are not. A buyer is a buyer. A buyer has certain parameters that he or she must fit in terms of the requirements that to fulfill that order. Very limited and very focused. That tends to be a little more transactional. A procurement specialist is a person that might have a wider set of boundary conditions. You're not limited to say who you can buy from, but a set of requirements, and you actually operate in that manner, and you can actually have tension in your supply chain to drive the best economics. And then the level above it is a sourcing strategy, which is, again, the bigger players actually look at very carefully is, do you want to be single source? Do you want to be multiple source? Each has its own advantages, and those have to be weighed very carefully. So when I look at the situation with the supply chain and where it's going, and the ability to execute, the transactional ones, I think you called it spot buying, will always be there. I think, though, as the industry matures, it's probably moving more to what is a larger player's sourcing strategy. And again, it's the adoption of what we've seen in the mobile space, as well as what we've seen in the high performance compute space, moving into this area. And then from a sourcing strategy inside the foundries, understanding how the players operate inside there, whether it's TSMC, Samsung, or SMIC, and how they have their own strategies to diversify against their customer base. Because if you think the mining industry is volatile, the semi industry is equally as volatile, but they have the long latency and the lag that has to deal with the capacity that has to come online and how to plan for that. So the suppliers who understand all those dynamics and have the relationships, I think, will be in the best position going forward.
And Andy, from a purchaser and operator of machines perspective, the risks to your ASIC supply chain are analogous with mine, which are very different from the manufacturing side of things. How do you view this long-term purchasing versus short-term purchasing models for your business? Would you rather have 12-month visibility into your supply chain in the future so that you can plan growth and raise capital, or would you rather buy miners opportunistically at spot pricing, when you see fit?
If I was going to have 12-month visibility of anything, I'd like it to be the Bitcoin price, because that would make life a lot easier. And that actually leads into the core issue here, which is I can confidently predict there will be a time again in the future where we move into quite an extreme forward supply market, and that's when we get to the next all-time high. You know, when we go through 100K Bitcoin, as we will eventually, suddenly human nature, everybody says, oh, I have an idea, I'll buy some miners, right? And you saw it at the end of 21, you saw it at the end of 2017. Suddenly everybody says, oh, I'd like to buy them now. What do you mean the price has gone up? What do you mean I can't get them for 6 months or 8 months? So there is that market-driven spike in demand that will definitely happen. I think if we find some kind of mid-ground where there is a 2-3 month out visibility of, like, this is where we're going to be, and place your orders now, we've got visibility of the manufacturing, of the capacity, foundry capacity, and PSUs and all the other things that go into the shipping of the hardware, then great. The other thing that's happened, though, since, I guess, 2017, 18, is that hardware has got a much longer life. So you have this kind of ongoing, very liquid spot market in pre-loved hardware, which can be of varying quality, but we've gone way beyond the days of basically every year's production within 12 months is worthless. Because the improvements in ASIC technology were such that the quality of the hardware that was coming out 12 months later was an order of magnitude better. And so the previous generation of machines, of which there's a great display through in the exhibition hall, immediately are just worthless. Whereas, we saw S9s going from $15 back up to $400 or $500 in the matter of weeks, because of the price action in fiat. So, we'd like to have better visibility, and we'd like to be able to place orders and then know the hardware's coming. And I think the days of long delays for shipments that you expect are gone. The industry is much better now at predicting what's going to be available when. But the real spikes are still going to be when the Bitcoin market is on the way up, and suddenly everybody thinks it's a good idea to make announcements about doubling or placing a 5 exahash or a 10 exahash or a 20 exahash order.
That's an interesting point. Like looking back on the last two peaks, they're actually matched with $10,000 ASIC prices, right? So back at the very peak in 2017 bull run, there were people in December paying over $10,000 for S9s. And at the peak of the 2021 bull run, there were people paying over $10,000 for S19s. Yeah. And that was peak pricing. And maybe that's an indicator in the future of a bear market coming up, is when people are paying $10,000 per miner. That's the signal that maybe this is overbought.
And maybe you need those margins to develop the next generation, right? Because whether you pay $10,000 for it or $2,000 for it, it costs the same to make.
Yeah, interesting. $10,000 miner. I'll keep that in mind. When it comes to thinking about how you manage costs and quality decisions, like there's obviously a trade-off there between managing costs and improving the quality of the underlying equipment. There's also a trade-off here between cost and time, for production and for purchase and deployment. Especially with a wide variety of small component limitations that might come into place. I think what we've seen is anybody who's bought miners at scale, you get many sub-variants and models of your various mining equipment. How do you manage those sort of challenges when it comes to your business and scaling it up, these kind of small component changes, which might actually create whole different sub-models? How do you balance quality control, time, and cost from a manufacturer's perspective?
So managing supply chain is, it requires specific expertise, and we actually have all the POW mainstream cryptocurrency miners, and we have massive production, and so as we have the world's largest market share, we have to supply our clients with all of them, all the elements you mentioned. Actually, I can give you an example that, as we all mentioned about the peak cycle, the peak of the cycles in 2021, there's a period of time the demand is increasing dramatically, and everybody under the pressure of the pandemic. But we actually increased our production capacity to 1 million units annually. And for that period of time, our clients have large order with us for a yearly round, which means they place an order for 12 batches maximum for that year. And we actually deliver everything on time for them from different manufacturers. So that's kind of proof of work that we are actually really, we did excellent in this aspect as a manufacturer. We are working with multiple suppliers to ensure that they can give us astral operations and prioritize our production demand if there's a period of time we need it. And that kind of strong supply chain partner relationship really benefit us a lot. And we won't sacrifice quality to ensure deliver everything in time or something. Since I think if you have mining experience since 2021, you must touch base or know pros, and that's the products we produce most in 2021, and that's proof is the best quality products in the market, and everybody feels satisfied with it because it's really a nice baby to run there, and you don't have to put a lot of effort to the daily maintenance and operation. And the delivery time is something that everybody talk about, and especially for the future orders. Since the clients desire to place an order with us for the entire year at once, that shows them their trust to us to deliver things to them on time. And we actually did that. As all the public companies have their announcement quarterly, and if there's any delays on the product or on the supply chain or of Bitman's order, if they have delays on the hash rate, I think you're rarely to see that kind of news because we actually take that really, really seriously.
Okay.
Yeah, Jim?
So I'm going to try to answer that from the perspective of a silicon system manufacturer. I think the parameters you talked about, cost, time, and quality, I would actually add a fourth component, which is inventory. Inventory is a big component that has to be managed very carefully. And even just managing the three components that you talked about, cost, time, and quality, it's a really, I call it a three-dimensional Rubik's Cube that you actually have to get all the colors right. And then you add the fact that the manufacturer has to bear the burden of inventory. I think what you're seeing now in the last 6 months is potentially, I'll call it an oversupply that's out there. And in our industry, semiconductor industry, we have the saying, eating like an elephant, pooping like a canary. And that is a scenario now that has to be flushed out in the system, that has to be done. But to address the cost, time, and quality issues, the overlay that has to come on top of that is the compression of the technical solution that has to go to market where the schedule doesn't change. So how do you actually build a system in your execution engine where the again, apologies for any acronyms, but the acronym is NPI, New Product Introduction, which is really a discipline in this space that we're seeing coming into the crypto world, where if you don't have a good NPI process, you're going to have a lot of stuff from a quality excursion perspective potentially getting out there. And honestly, as an observation, as the new players coming in, we see a lot of that where our clients come to say, can you help us with this piece of hardware? And our feedback is, well, it's not our hardware, but we could share with you what we see and what can be done, and our customers appreciate it. So taking that experience and moving it earlier into the development cycle really matters, and that's really a discipline that I think is coming into the crypto space, at least for the new players. And you kind of see that with some of the new entrants, whether the mindset of an Intel, the mindset of some of the new players that were announced very recently, and ourselves coming into this arena. And I think that's great for the industry. Okay.
Great. And then, Andy, from an operator's perspective, we look at things very differently, right? It's about how do we allocate capital, how do we make higher returns on efficiency, how do we manage our risks, but also we have to deal with investors as well who are looking for certain KPIs, which honestly don't make a whole lot of sense for the most part, right? Like an exahash target as a KPI is kind of a meaningless target, without taking into the context of what that means in terms of mining economics or network hash rate and market share and all these other things. So when you're looking at growing your business, how do you take that unknown volatility in terms of what's coming out of the entire ASIC industry and the supply chain, and how does that impact you and your position in the industry, as somebody who is a purchaser of equipment and trying to deliver the best returns and allocate capital efficiently?
So, you're right, Ben. Evaluating the risk is a key part of it, because you can play safe and you can order more of the established market-leading miner that everybody is using, that is, 70% of the deployed hash rate. And for existing machines that are out there, miners talk to each other. So if I say S17 and heatsink, there's some models or some production years where you think, hey, we won't move those around. If they're running, we're not going to put them in the back of a truck and let them shake up and down. But then when you have new hardware coming through, and there's a first kind of gating point, which is like, is this thing even real? So do you remember the Mountain Dew miner last year?
Mountain Dew miner.
Mountain Dew miner, 440 terahash, and it was like this Photoshop thing. Most people looked at that and were like, yeah, no, this isn't real. But if you just take the specs at face value, then you say, hey, here, have 20 million, have $50 million, and I'll expect the delivery in 12 months, and you're going to be disappointed. The second thing is when you see hardware coming through from maybe a more trustworthy supplier, again, you've got to think, is this going to be delivered on time? Are the specs going to be what you expect? And then the industry talks to each other as hardware is deployed, and if there is a reliability issue or if there's a higher DOA rate, then the word gets around pretty quickly. The challenging thing for new entrants, you can look at Intel and say, well, look, it's Intel. They're not going to Photoshop some fictional miner. But you have to be either cheaper per terahash or more efficient, right? And there's a spectrum, right? An XP is more expensive and is a higher efficiency than an S19 and so on. But you've got to be better on some metric. If your new box is a bit more expensive and a bit less efficient, and we've seen people announce products like that, for several years, you shouldn't be surprised when nobody orders any. And then they've done all the development, they've put 20, 30 million into the taping out and everything, and then nobody buys it. And there's lots of sob stories, especially 2016, 2017, when every Bitcoin conference like this was a desk with somebody asking for 20 million just to please finish their ASIC. Now it's much tighter. And so if you're making that decision about allocating capital, you're either doing it because you're taking a risk because it's going to be more efficient or cheaper, or you're going with the kind of the safe option of, well, I know I'm going to get this and I know it's going to work. Sometimes it's difficult to balance those.
Yeah. Well, we have 1 minute left, so I think we're going to end with kind of a lightning question, just real quick, short answer. One, how much exahash do you think the industry is manufacturing every single month? And where do you think the hash rate's going to end up at the end of this year? Where do you think the hash rate's going to be before we go into halving next year? I'll start off, I think it's 20 exahash. I think we'll end up at 415 at the end of this year. And I think we end up at probably 430 going into halving next year. That's my take.
I have no idea because I think the main limit is not about manufacture, it's about the mining farm capacity because we all see that there's miners in the warehouse that can't be put up on rack and running. So I'll skip.
Okay. First one was how much is the monthly output now? I actually look at it a little longer term, and I know it's lightning round, so I'll be very fast. But I think the industry is going to one Zeta hash down the road. And if you use an easy number like 125 terahash per machine, you just do the math, that's 800,000 miners that are out there in the field. If you look at the aging of the miners, maybe every 2 years they cycle, so that's about 400,000. If you do on an annual basis how many get replaced, then you divide that by 12. So that's your monthly kind of trajectory. Internally at Epic, we actually have our own bet of where the hash rate will be at the end of the year. My number is 400. For the halving, I haven't thought about that, but it's probably going to be around 450.
Okay.
Okay, that's how we look at it.
Great.
So I think monthly production, mid-teens, end of the year, I'm going to say 420 just to be more than 415.
Choosing the main number.
And like, yeah, by the halving, yeah, I mean, it'll be like 450, something like that. It'll be 500 by the end of 2024.
Okay. All right. Well, great. Thank you very much for having us. Thank you all for being in attendance. And yeah, that was us. Great.
Thank you.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.